Good evening. Welcome to tonight's Market Talk session. For some of you who are regular, you are familiar with this series of educational webinar. So allow me just to go to my slide first. All right. So once again, welcome everyone to tonight's session, Market Talk. The theme for tonight will be decoding the tariff shock. What's next for the US, China, and Singapore markets? And for those who may not know, the Market Talk series is part of the Learn from the Pros educational series of webinar that we bring to the retail audience. And this is run every year, and the current one is actually season 4. So we've been running this for fourth year running already. And tonight's session is the last session for series 4. And we are looking forward to running season 5 in the next half of the year. So do look out for that. For Market Talk, so far we have our expert that spoke. We have Wong Kong Hao, of course, who will be sharing with us tonight. We had Ho Sing Fu, who shared with us his super stock trading strategy. And we have our very own CGSI research analyst, Chua Wei Ren, who shared with us technical outlook for stocks. So do look out for all these expert speaker again when we run season 5 in the next half of the year. So before we continue, just want to flash this disclaimer. Do note that whatever we share today is for educational purposes only and are not stock recommendation or incentives or recommendation to trade at all. Do your due diligence and also check with a licensed broker or financial advisor if necessary. So without the way, just want to remind everyone, we welcome questions for tonight's session. In fact, the more questions you have, the more we can learn together. So do keep those questions coming. For questions, do key into the Q&A box on Zoom, and we will come to them towards the second half of the session where we do the Q&A. Avoid putting questions in the chat box because it can be quite challenging for us here to look out for those questions. So chat box is more for your live chat. If any live feedback you want to let us know, maybe the volume is too low or the slide is too small, you can't see, just put in the chat box. We will take note of that and try our best to do a better job. Other than that, put all your questions in the Q&A box. And if you wish to ask questions directly, you're welcome to just click on the raise hand icon and we can unmute you and you can speak and ask questions directly. So with that out of the way, I'd like to come back to today's topic, Market Talk, Decoding the Tariff Shock. And a quick introduction to today's expert speaker. We have Mr. Wong Kong Hao. I think most of you know him very well, so I'll just do a very short introduction. Kong Hao has been in the financial market since 1995, and he started as a floor trader, so he has all the experience from the buy side as a personal investor, trader, all the way to the sell side where he was servicing client, and now he is an independent trainer, also analyst and researcher in his own right. So we are looking forward to hear from Kong Hao, his analysis of the current market, and of course, more importantly, what's going to happen in the foreseeable future. So Kong Hao, I'd like to pass the stage now to you. Please go ahead.
Yeah, so first of all, thank you, Nixon. It's always good to be back. And I think you give me a very good introduction from your personal experience with myself. It's just so not off the script. It's off the script. So I just want to get moving with the presentation tonight. I think a treat for myself and was the half an hour when we prepped for this seminar. We spoke quite a bit about the market, and he asked me specifically a question, not just for myself, but I think for all of us, is that when we say that to buy, exactly what to buy. Yeah, so I think I want to address this question as well. Since he asked me this question, I think we can go into it later on, but towards when maybe I share about the Singapore market portion in a short while. So there's something about myself, and my specialties is that I started as a floor trader, as what Nixon has introduced, and so we use a lot about charting, and so that has also equipped me that throughout the last 30 years, that I use charting as to sieve out opportunity, but also include that because through my journey I realized that charting is one thing, but I need to confirm it with the macro analysis. So once the macro analysis, it gives me the similar reading of my chart. If the chart say that bottom is the trough has met and potentially it may pick up. So, but I also need to confirm with my macro analysis. So we're gonna see that in the market, which has very interesting since 2nd of April. So we're gonna tie things up and see how it is doing. And with that, applying the technical and confirming with the macro analysis, over the last 30 years or so earned me the surprisingly the last year I got this award as a trading view wizard. So I do not know why is that, but I realized that is I was really happy for the whole entire year. It's such an honor when I go and Google what is a trading view wizard. So we're going to learn about how to apply technical but confirm it with the macro analysis and see where the opportunity is in the US market, the China market, and especially for the Singapore market. So what I'm going to present to you is based on my own understanding and definitely for my own consumption. So it is not a recommendation. It's always an honor to be having different platform to share the view, and I take it very seriously. So every time that I have opportunity to share, I spend literally weeks just to prepare for a session like this. Then the evening like this, I'll spend the whole entire day to just go through it. What have I missed out and what can I update in the information? So it's not a recommendation, so please consult your licensed broker. So let's get into the first part. Of course, we all knew that on the 2nd of April, when Donald Trump released the news about the Liberation Day tariffs, it is the end of the rule-based globalization. And I'm glad that our Prime Minister are very brave. I believe on the second day, if not the third, he stood out and speak to the whole world. I don't think he meant to deliver it to the whole world, but this video, 5 minutes video, went viral. And he says that a very strong word that he used. He said that it marked a very earth shaking. Yeah, it's an earthquake changes in the global order. The era of the rule-based globalization and free trade is over. Yeah, it's over. It's a very strong word. So then we have to examine about the whole market itself. Now, um, let's look at this Dow Jones chart over the last 50 years. Of course, when did the super bull in the US market started? As we could see over the last 40 years. Since the 80s, and we could see that the market started to enter into a super bull. Now, it all started because of Ronald Reagan promote global capitalization.
Excuse me, Kong Hao, Nixon
Yes,
here. Are you
yes.
sharing screen or not yet?
Oh,
Because we don't see anything.
okay, Ken.
Mm,
Thanks for reminding.
no problem.
Yeah, so I need to share the screen, right? Okay, great. You can hear me, right?
Yes, sound is good.
Okay. Yeah. So now you can see the screen here.
Yes.
It's moving.
Yep.
Okay. So thanks for intervene. Yeah. So the intervene is very important. So now this is what our PM have said, right? The globalization, the rule-based order is over. And let's look at this Dow Jones chart over the last 40 years. Now, Ronald Reagan promoted global capitalization, and he's still alive, but the WTO taken place in 1995. Yeah, so, but we could see that at every stages of the global capitalization, um, the motion of doing it to the actual taking place of the WTO, we could see that literally the US market, because of open trade system with the US, the whole US economy have picked up. Okay. Now let's go to the technical first before the 2nd April. Now we could see that this is a quarterly chart. And again, I'm going to point the attention to how to apply the technical and confirm it with fundamental analysis to form a very sharp view. Yeah, so this is the award is, I don't want to be ego about this, but if you have an award, it means that you are doing something right. And I've been using that quite effectively for my personal investment as well, is how to combine technical and confirm with fundamental analysis. Now, before the 2nd of April, this was the third quarter or last quarter of 2024, and we could see that there's an inverted hammer. Now, then the first quarter of 2024, before the Liberation Day on 2nd of April, it formed another inverted hammer. And with this two inverted hammer, you could also say that it could be a double top or a fork or inverted fork or whatever name you call it, but it's a sign that the market may have peaked. Then comes 2nd of April, where Donald Trump announced the Liberation Day tariff is a change of the whole order, which is the end of the rule-based globalization. Now, so this is fundamental news. Now, if you're going to look back in history, I could not see a double top like this over the last quarter of 2024 and the first quarter of 2025 in the history of the Dow Jones. I could not see that. So technically it's there. And fundamentally, it also project to me that it is confirming that that's what I'm seeing here. So in end of last quarter and beginning of this quarter of 2025, my reading is technically, it seems to me that the US market may have peaked in December 2024. It means that the highest point, it was December 2024. Now, so I'm not a gloom and doom preacher, which I do not want to be, but this story we heard again and again over the last 10 years, 20 years. There's always this gloom and doom preacher preach about this. Or even when I was 13 years old, first time I became a teenager, I have this Indonesian classmate, very well-to-do, that this is the first time I heard that US is the greatest debtor of the world. So that was the first time I exposed that US is the greatest debtor of the world. But over the last decade, nothing happened. Yeah, but something has happened now is that there's a change in the order. So that's something that we have to recognize and have to take it very seriously. But at the end of it, I may be wrong. The market may still break the December high, still move up, but it's fine. But at least at this juncture, we have to stay very cautious about the US market. But I have to say this, that whatever uncertainty there is right now, I will see that where's the silver lining, and where is the opportunity. Of course, I'm going to point out to you Singapore, and I'm not just saying because I'm a Singaporean or I'm doing with CGSI and maybe partially sponsored by SGX. I'm not saying that because of that. I'm saying that because we could literally see that Singapore STI has never been the same compared to many, many years ago. This year, for the first time, it broke above 3,004, and today is at 3,009. Never seen before, right? So something is doing right about Singapore market. Why? Because there's a shift in power from the west. It seems like it's migrating to the east. It could be at the beginning of the time. Okay, let's study deeper into it. Yeah. So let's look at what next for these markets. Let me just open up by addressing the US market at this point in time. So along the timeline, I'd like to recap because before the session start, I have a good chat with Nixon that unknowingly that this is the fourth year in running. So he initiated this with the Pro Series. And 4 years in running, so every time I will share about the market outlook. Then we're just going to recap how true that was back then, our view. Now, on 28 November 2024, and that was the just about 6 months or half a year ago. So we have this outlook about the US market. So technical and also fundamental as well. But let me just present you the technical, what we have shared on November last year, about half a year ago. That was before the Liberation Day. So based on this trough, that you could see that so nicely formed on NASDAQ I mirrored this with the most significant top in the year 2000 for Nasdaq. That was a dot-com boom. Then I project this line up, and I realized that the market is pretty reactive to this upper band. And of course, that was a note to be taken. Could it be a resistance for the US market at the point in time? That was half a year ago. Now, then as time passed, as of now, today, we could see that we were pretty right. The market did break above, but you could see quite a bit of hairline here. And it kind of, this also signaled that's lots of false break. And before the 2nd of April, we see how the market have kind of smashed down and now retraced back up to 21,800. So my projection for the US is that the resistance line is still there technically. But fundamentally, we discussed about the rule-based globalization. The order is, I would say no longer exists, but is the US have created this. They have also, in a way, abandoned this as well. So something may have shifted. Now, I'm expecting that as the talk continues, as the tariff continue to develop, this is my projection for the US market. So whatever is very straightforward, whatever as an investor, I see that I'm not exactly certain because there's a lot of uncertainty in the market. Usually when there's uncertainty, the market will also move in a huge range like this. So we could see that the market have pulled up to about 21,800. But I suspect that technically December 2024, the highest point, will be quite tough to break above. Okay, so that's technical view. Now let's move on. Why is because there's a lot of confusion here. So even today, as we read another surprise news that caused now the US, the Nasdaq to move up by 2%. I just received a text from my broker that it says that the US court blocked Trump's Liberation Day tariff. Because of that, the market went up 2%. But every day the story changes. If not every day, maybe at least I think my experience is that every week the story change, tariff story change. So if I understand that uh, as a person that I share about market insight, actually it's very challenging for us to develop the slides for the compliance to clear because every day things keep on changing in a major way. So today I spent about the rest of the afternoon to update the slides, So that's the new changes. Because of confusion, we will expect to see much volatility in the US market. So it's great for traders, but it is no good for investor. Why? Because imagine that after the 2nd April, if you bought the US shares, today may be up. Maybe the next few weeks later, you come back to visit your purchase price again. Yeah, so that's something that investors do not like. But if you're a trader, then that's something that you may welcome, provided you know how to manage all this risk and opportunity well and fast enough. Okay, let's move on to another recap that I did on the same day, which is half a year ago on this title, Tales of the Two Giants. I'm referring to the US and the China market back then. So back then, that was before the Liberation Day, 2nd of April 2025. So then the real threat is inflation is on the radar. Even today, nothing have changed. The yield or interest rate remain high. And let me just add on today, the treasury or the T-bonds have been selling down. It's nearing the all-time low, is down 44% from the all-time high that was in March 2020. Yeah, so from March 2020 until the recent all-time low, it was about 2 years back. Until today, it's about down 44% for the T-bonds. So gold is still in demand among the central banks. So when these central banks start to buy gold in such a major way, even today, that it speaks to me one thing, that they are hedging into inflation to come. So that means what they're saying here is that they're still seeing that inflation is still on the radar itself. Then we spoke about half a year ago about the potential escalation of geopolitical tension. So the war between the few things is still there. And of course, the risk is always, if it escalates further, that may cause supply chain issue. So I think we are quite, in our memory, I think we're quite fresh because of the COVID-19. The supply chain actually caused the inflation to pick up tremendously. So that may come back, but as of now, I think it's quite good. So half a year ago, we also discussed about the effect of Trump's tariffs. Now, if the Trump tariff continue, which likely the case, it's just going to bring forth inflation to pick up. So I know that the NVIDIA numbers are pretty good, but that was in the first quarter. First quarter is between Jan to March, and that was before the 2nd April. So I think the second quarter of all these corporate earnings will be more telling, and that will be available in July or August. I think those months will be much more interesting to see the effect of the Trump tariffs. So all this is still in play, and the inflation is still on my watch list. Not over yet, and the yield is very high. Okay, interest rate may be low right now. If you look at the fixed D of 2.5, I just met my dad today. He's complaining to me that interest rate, the fixed D dropped down to 1.9%. But I say that, but the yield, but of course you don't understand what's yield. I said, but the yield is still high, but I think continue the 3 months roll on the fixed D. I believe that the fixed D may continue to pick up again based on the yield that I'm seeing here. So let me just move into China. Now, so US, very uncertain. And let me just recap about US. I'm expecting huge volatility for the US market. So while US is trying to bring back manufacturing, but it caused a lot of turbulence in the market, what are the rest of the world doing? They are making friends. So it's a risk that US may have created, but I also see that every risk or uncertainty, there is always opportunity. We have to read into it. Now, what I'm seeing here is that EU and China, when it comes to trade, they were enemy before, but it seems to me that now they are friends. So China and EU agree to fully lift restriction on mutual exchanges. And 2 days ago, you may read about this. So not just EU and China, but there's also 1 + 1 + 1 is equal to more than 3. So it's not in equation, but there's a power in it, right? So between ASEAN, China, and the Gulf bloc, they have come together to agree on cooperation in the future. So there's a lot of excitement that's moving on among all these nations. So to me, it's the speed of partnership forming with after 2nd of April, the Liberation Day. So this is what I'm seeing, that they have to act fast and move fast and form new alliances. When form new trading blocks, it also means that there's new business opportunity moving forward. Let me just break down more and more on China and narrow down the Singapore side. Now, so going back to the half a year ago sharing on 28th of November 2024, we spoke about China. So China don't have an inflation problem, they have a deflation problem. But their deflation problem is not as bad as the one in Japan. So Japan, what happened when they have deflation, a lot of people are not motivated. Yeah. So, but when I went to China, I look at their deflation problem, actually is quite, it's deflationary, but people are generally still quite happy. As I checked the ground, I was there end of last year and this year to visit their cherry blossom in China. So they don't have inflation problem while the world having this inflation fear. So going back to the real business is in moving forward in this generation is technology. So for EV, they have catch up with Tesla for, I think this year will be the 3rd year by this year. So AI is something new about last year. They have a DeepSeek. So now it's on par with, possibly on par with the US. So they're doing good with technology race in AI and EV. Now for debt, that's something that we have to study a bit on our personal note here is that what I understand about China debt is that the local government are having debt. But my focus is more on the central government. How much debt do they have? Or how much reserve do they have? So again, reserve, nobody knows. Just like our own reserve is a secret. And I do subscribe to it because you cannot let your country reserve make known to the world because we are in the world of trade war. Financial warfare is not just a hot war, but it's also financial warfare. So it'll be quite dumb for you to show fully how much reserve that you have. So nobody knows. I do not know how much this China central bank reserve that they have. That one is more important, the central bank. So on the debt, China debt, you have to study it by yourself. Okay. Now, I think the next block, which is very important, is trying to position in forming trading partners moving forward after 2nd April. And they are quickening up their pace. And I could see that a lot of airlines are being formed from what I see. Yeah. Now, going back to China technically, so I just described about to you about fundamental. So that was a sharing in November 2024. This is about 6 months ago. Now, my whole idea was that I could see that China, this is Shanghai Composite Index, has been range bound for the last 20 years. Range bound, right? So my idea is that could it be at a point in time was that half a year ago, before the Liberation Day tariffs. So I'm saying that potentially China may break on the upside, or it could be the downside. But my take is likely potentially on the upside based on these three. Yeah, so they don't have inflation problem. The technology race, they seems like they're claiming back on good grounds. That a bit unknown, but personally, I find that the central bank or the central government still have a lot of reserve. So based on this, my guess is that the upside break is slightly. Now, after consolidation, especially as it narrowed down, my experience is that usually the break will come. So then I do not know what was the story or what going to be the story, but after 2nd April 2025, I know what is the story behind it that will likely cause the market to break above and start to move up. It could be a transition of trading power from the west to the east. And of course, China being the second largest economy in the world, I think they stand a chance. So this is my analysis combining both technical and fundamental analysis. So again, back then, I do not know what could be the story behind it. But after 2nd of April, things became much clearer. Now you could see how I plan it and how I patiently wait upon the confirmation. So if you ask me half a year ago on this view and half a year later, am I more confident than November 2024? My answer is definitely a yes. And looking at how things are progressing right now. So let me just give you an example of looking at things on a breakout technically. Now, let me just narrow down to individual stocks right now. And on the case study of 15 April 2024, so then I have an idea about the Asia market, ASEAN market, especially ASEAN, that we are on a very neutral ground, that we are open to do business to the world since the very beginning. Yeah. So especially during this tariff war, we are even more knitted together as ASEAN nation that we want to be open to do business with the world. Now, so I have this idea that China play a part. So 15 April, I start to, or on not in 2022, I start to be quite active in looking for potential China stocks listed in Hong Kong. So this was one of a case study that technically I'm always looking out for something that's brick, that it come with a story. So we could see that Xiaomi, that was a case study done in down here, yeah, in my study room with Nixon and the platform here. 15 April 2024. So we study about Xiaomi have kind of from a high point, it came down, it traded sideways, and then it kind of broke above. So back then there was a news that they are developing to EV, and that's why I see that it break above. There's some change in their business model in EV. I personally I like it, so I took a risk, and we discussed about potentially a broke above. Could it be a growth in the making? So I have this model about every cycle. There are 4 stages. There are declining stage, range stage, or income stage, I call them. The value stage, where the break has just happened back then, and potentially could it be entering into a growth stage. So at the point of time, it was 1652. So that was our discussion based on technical and some fundamental understanding here. So as time passed, we could see that the market have grown from 16 Hong Kong dollars. The highest point was somewhere around 57 Hong Kong dollars. So along the timeline, I've cash out some at 40. I'm still holding to some. No regrets to cash out some at 40, but at least I still have some stake in Xiaomi today. But towards the end, as usual, I was trying to do a study. So what's next? Because I think I try to address Nixon's question to me here is that if to buy exactly what to buy. So I'm going to unpack to you subsequently. Okay. Now let's look at the Singapore market. I'm to my last portion, so we're making good with time. So at least we'll have 15 minutes for Q&A later on. Now, for Singapore market is important, and I can tell you that the in times like this, a very uncertain market after the Liberation Day tariff. So after that, we have our election, and the ruling party won the majority votes again with a very strong mandate, which is to me as an investor is important because the foreign investor looking into the I'm referring to the equity aspects here is that the foreign investor, they like it, so they have confidence that the ruling party will continue to run Singapore well, our economy well, into this century with all this tariff war that's ongoing. So when they start to come in and support the market, which is important because it form a base, it form a general support of the market for the equity. So to me, that's important. But we'll come back to this again later on. So let's go back to the case study on the last session that we have. That was in February 2025. So by February 2025, that was just about 3 months ago. 2024 have concluded. So let's study about what did we understand about 2024. So in the environment of inflation, and inflation is still a concern because why I say the concern is although inflation have come off for US about 2.6%, Singapore is about 1+%, but it's still a concern because if you ask ordinary folks on the street who have no knowledge about financial market or they don't invest in stock market, if you ask them this question about what do you think about the cost of living in Singapore, not just in Singapore, anywhere, they will say that, let's say in a context of this wonton mee today selling at 450, you just ask them this very simple and basic question. In the next 5 years or 10 years, do you think that this wonton mee at 450 will maintain at 450 or come down to 350 or maybe will go up to $6? I think they will likely say that you'll continue to move up. Having no financial knowledge or not interested in the stock market, but generally they have this subconscious understanding that the inflation will continue. Okay, now this is true, but I can tell that Singapore is in a very good position here. Why? Because number one, we have a very strong Singapore dollars, and number two, our economy is well diversified. Okay, let me just break down this two because it's important to answer Nixon a question earlier to me. If you to buy, exactly what to buy. Okay, I would narrow down to ASEAN, Singapore, and perhaps China, Hong Kong. Yeah, so these are the region that I'm seeing that because there's a transition of trade power that from the west perhaps to the east. Now, first, let's talk about especially Singapore market here. Is that we have very strong Singapore dollars to weather inflation to come. Now, so in the past, a lot of the investor and traders been telling me that US dollars is very strong. I would say that in what context? I kind of disagree that US dollar is very strong because if you look at the dollar Sing and the dollar Swift over the last 40 years, in fact, our Sing dollars have appreciated against the US dollars by 40%. And can I tell you that 40% is a lot when it comes to two currency exchanges? It's a lot. So can you imagine you buy a property in the United States at $1 million? Let's say the market maintained at $1 million, but just by the exchange rate, you have lost out $400,000. Can you see that seriousness of currency exchange? But I would say that the projection of the Singapore dollars, or rather, will continue to show strong performance the next many years to come. So that's important because it will protect us, or rather help us to hedge into the inflation pressure that's ongoing. But tonight, I'm not going to talk about inflation. Inflation is going to be there, and there's a reason because of what you read is true that money printing all over the world is true. And all these major economy are exporting their inflation outside of their country and to all over the world. So inflation is not just in Singapore, it is everywhere in the world. Okay. Now let's move on to the other important point, which is diversification. So this is from the Department of Statistics in Singapore. Um, which country do we invest into the most? Which is important because as we invest into that country the most, if that country prosper, our investment will also grow. Now let's look at the totality of Singapore investment. It include the government investment. It include the company investment, listed and non-listed investment. Now we could see that Singapore have invested the most in where? China. Okay. And if I'm gonna add China and Hong Kong, and you could see that this chart is like it's going to break the roof, right? So therefore, the chip about the China and Hong Kong play a very important part. As we could see that China market is stabilizing, therefore, we could also conclude why our STI has broke 3004 and is on the way up to 3009. So of course, your next question is, you can ask me, Konhao, I missed the 3004. I missed that 2008. Just about 1 year ago, I missed it totally. But I'm going to share with you how I managed it. I still have some standing order at 3004 for the STI ETF. So sometimes you just have to be patient enough. But along the timeline, if you know that the general trend for the ASEAN market, China market, Singapore market could be going up, you just have the patience to put some standing order if you believe in that STI ETF, or you can always look out for some laggards that is around. So later on, I'm going to share with you one of the laggard that I have studied. So again, it is not a recommendation. So this is how you pick up stock, exactly what, if I say to buy something, to invest something, exactly what to invest. Now, first you look at the totality of where is the next major move is going to be. So I believe it's in Singapore, it's in ASEAN, it's in China. So my focus will be this area. Then we're going to zoom down to industry, which I'm going to show exactly what are my thoughts and to the individual stocks that we have spoken about earlier and later. Now, so we note that this part is important. Yeah, so I hope that there are measures to stimulate their consumers' sentiment will improve. So once they improve, you were able to see that the STI could be of a different level moving forward. I'll explain to you why in a very short while. Now, so we know that the Singapore business have invested a lot in China. So exactly which sector have they invested into? Now, I'm seeing manufacturing is number one. Financial is real estate is number two. Number three is the finance and insurance. And the last one is the wholesale trade. So real estate, I'm not exactly sure whether there's growth in China, but when I went there, end of last year and beginning of this year, so I spoke to the local people on the ground. I need to get a feel about their outlook for real estate. So generally, the feel is that the real estate have met the trough, but the growth may not be there. So which I also agree with them. I think real estate have met a trough, but whether am I interested in the investment, our Singapore company investment in real estate, maybe not so much, because I think the potential growth may not be there for the time being. Trough is there, but potential growth, I'm not exactly sure. So on this part, now you see how I analyze the markets, that we look at the totality of things. Then I may not be too keen in Singapore company that have huge investment in China property. So that one I may put one side. Now again, I can be wrong. Okay, so I will be focusing more on the manufacturing, financial, insurance, and wholesale and retail trade. So towards the end, I hope to share one case study on the wholesale and retail trade. Let's move on. Okay. Now going back to about 9 months ago, I was sharing here on 29th August 2024. So what did I share? Now, bear in mind is that August 2024, it was the end of third quarter in 2024. So we are projecting about what is going to be the fourth quarter of 2024. So the topic is more steered towards about what is going to be the outlook of 2025. Now, so exactly this is the slide that I've screen capture. So then STR was at 3004. And 9 months ago, I say that at the end of the year, if it can break and close above 3004, as we could see that in history, SDR has been testing this 3004 numerous time, numerous time. And again, it's very similar to the China Shanghai Stock Index that we saw. Is we saw a wedge, a triangle. If it tests hard enough, one fine day it break. I'm not too sure if you're gonna be in 2025 or 2024. I say I have no idea. But in August 2024, I say we got to wait for the close of 2024. Technically, if it can close above 3004, the closing price of 2024 is important. It means that my idea is that if it close above, I think this former resistance, it will be the current support, which is right now. Okay, let's look at what happened to February 2025. Means that 2025 close, we are moving into the first quarter of 2025. So it has broke above. Yeah, so this is a quarterly chart. End of 2024, very convincingly, it broke above and then is moving up. Yeah, so I'm quite my view, my study here is that once it's able to break above, where you could see it close very nicely, and my view is that the moving forward, the trend, it should be the former resistance, it could be today's support. So at the point of time in February 2025, remember that the Liberation Day have not been triggered, right, on the 2nd of April. So nobody knows. So you still remember that I say that I will have some standing order at 3004. If it comes, I would love to pick it up because technically it's there. And later I'm going to share with you fundamentally why I think 3004 is going to be a support. But sometimes it may drop a little bit more, but I think we're quite good if we study, we put enough effort to study into the market. So 3004, that's my study. It should be the support moving forward. So then on the 2nd April, the Liberation Day market, it announced. So we could see that how the market has kind of came off down below 3004 slightly. And now today is at 3,991, 3,911, right? Now, moving forward, if you're going to ask me this question, say, Econ, how I miss out 3004 to buy the STI ETF or the individual stocks or whatever. But I just have to say one thing here is that just be patient. You may want to continue to put in some standing order at 3004 because overnight they can have some black swan event. I do not know, but that's how usually I trade things. When I firm up with some ideas, I conclude some ideas technically and fundamentally, I could gel them together. I have a certain confidence, I will place my order there. So I will wait for the volatility to hit my order, then I get it done. What if it don't come? The market continue to move up. Then it is time for us to look at individual stocks because you have to believe that there's always laggards around. Okay, so what if it don't come? Because that means you have performed its duty. It have came on 2nd of April or 1 or 2 days later. Now market move up. Then you will look at the stocks. Now these are the stocks that if you are you believe that the growth story of China, then that may benefit Singapore, some of the Singapore company. If you believe in that, then this could be this few stocks could be something that you should put in your watch list to watch them from time to time, especially whenever there's some new development. Yeah, they have new invention, new initiative. So this is something that I like to see, especially when they announce that new initiative, you could see that the market break above the range. Remember, just now I shared with you every cycle, there are 4 stages. So this is produced by SGX, by the research. You say that the 20 most traded SGX stocks, half of their revenue are from China in the last financial year. So you can screen capture the page. And I also believe that this session is being recorded, so you can always review them again. So today, towards the end, I'm going to present to you one of it, which is the DFI R stand for Retail Group. Yeah, so I will give you my reason why, technically and fundamentally. So every time, once in a while, I just go through this few lists. Yeah, so I hope that SGX can produce this list on the most updated version. So then if you find that the other way, if you believe in the China growth story, which I kind of subscribe to the idea of China growth story, then if you don't like to pick individual stocks, so these are some ETF that you can go through from time to time as well. So you may want to go through the same process like what I did. That means go through the technical study and then confirm with some fundamental macro development or understanding that you may have. Now let's go back to half a year ago analysis. So usually towards the end, I will give the viewer some homework to do. So back then, based on the same theory, out of these four stocks, based on this study, I want them to identify which one was range for the longest time and it seems to break above. It went to value stage. So I think most of them got it right. They identified that is Yang Zhejiang Finance. So that was half a year ago. So then Yang Zhejiang Finance was at 39 half cents. So you could see that the market range and suddenly it kind of break above the range. Okay. So very similar to STI market, which I'm going to share with you in a short while. So there's a break and I believe that 39 half, it may continue to trend. These are value, it may enter into a growth stage. So where is Yang Zhejiang Finance today? It is about 71 cents. So we could see that how technically it broke above the range, it retraced, and it started to trend up. Now let's go back to Singapore market that have a lot of business in ASEAN and China. Now let's look at DBS itself. And if you realize that out of the composition of STI, there's about 30 of them, sometimes 33, sometimes 31. But anyway, it doesn't matter. It's about 30 of them. But you realize that a lot of our listed company here, their coverage, that means when they do business, they do a lot with China and ASEAN. Now let's look at this chart alone. For DBS, the blue is Singapore market, which is important. Yeah. So in a way, DBS is our national bank. So now the next big market is Hong Kong, which is this green, and the rest of Greater China, which is China. So this portion is China, Hong Kong. And then the purple is ASEAN, South and Southeast Asia. Yeah, so the whole portion about the DBS, including OCBC, UOB, they have a different mix, but you could see that heavy emphasis on ASEAN market. If ASEAN grow, China grow, they will have perhaps will continue to trend much higher. So what I'm trying to say here is that if I believe, which I think I believe in the China growth story, I would likely to focus on individual stocks that have dealing in manufacturing, but of course do look at their ratio, their numbers as well. As a company, they have to manage their books well to not get into debt too much. If they get into debt too much, there must be a reason why. It could be retail market. So retail market is always in debt, but make sure that their in and out is always forthcoming and good. So these are the three areas personally that I would like to focus on in finance and insurance, wholesale, retail, and manufacturing. Now, my next question to you here is this. How well is Singapore navigating this shift in global order and trade? So what I'm suggesting here is that earlier I mentioned about there's a shift in power. So from the west, it seems to be shifting to the east. And you could see that the patterns of a lot of nations, what they're doing here is that they are forming allies, making friends, making trading blocks as fast and as quick as they can. I think Singapore is quite quick. Now, how well is Singapore navigating the shift? It depends on how fast and how quick and how sharp and how careful we are in forming all these deals. It got to be fair. It has to be fast. Yeah, that's what my take is. And there are three areas that the special task force, I think on the second or third day after 2nd April, the Prime Minister announced that Deputy Prime Minister Gam King Yong is going to have this special task force. Now, one of the area that he will be focusing on is explore new market or diversified supply chain. Also study the cash flow and also to continue to check on the evolving tariff situation up to today. Yeah, today is still evolving. So there's one thing that I share with one of my business partner when I just came back from Jakarta here is that he was very surprised. I say Singapore model is this. The government focus a lot about cash flow for businesses. They will always support in crisis. They always support huge funding to the SME, yeah, including the listed company as well. They always support them The whole idea is they want the companies here in Singapore to outlast the crisis. So if they outlast the crisis, business will always come back. Now, let me just give you one example here is that if we have competitors around us, if their SME will face the similar situation or listed company will face a similar situation during uncertainty. But for our island here is that at least the government, where you can see the track record, is that they will continue to help the business to help them to stay afloat. Because if the orders start to come back from the West or different part of the world, our SME are here to take the order. They may visit our neighboring country, but maybe they have closed shop. So what how would they how they going to the new order, where would they come to? They'll come to this part of the world, Singapore, because the companies are still there. So that's something that I find that's very unique to Singapore. But moving forward is more than that because there's a new market to be discovered, which is ASEAN, Singapore, and China market, which is to me is quite exciting as an investor that I'm looking forward to. Now let's tune back a little bit to November 2023 during our case study here is that so back then is that out of COVID, I could see that literally see that Singapore have emerged stronger from COVID. Yeah. So these are tagline that I got from Prime Minister Lawrence Wong, right? He always say we emerge stronger. I think it's quite true. So after COVID, we emerged stronger. Personally, I could see that we became tech hub, we became financial hub, this hub, that hub, that hub. Back then haven't green hub yet, but it seems to me now we are green hub as well, right? With the Long Island proposal, all this and that. So back then, I could see that even for STI, I adopt the same strategy. The same matrix is that every cycle, there are four stages: income, value, growth, and decline. And then we're at the income stage. I'm just very curious what could brought us into the value state. Means that it will break above this range for decades. Could it be, well, we have more financial or technology company listed in our composition? So I have no idea, but I hope that seems like we're doing well. I hope that we'll break above this range. But now I know what is it. It's the transition of trading power from the west to the east, and seems like we are making very good time to form partnerships, alliances with ASEAN, with China, and with the Gulf area as well. So what we are seeing here today is that we could see that literally the range have been broken and retracement may come. I do not know whether it'll come or not, but I hope that it will come. If retracement come because of external factor, I will continue to invest in Singapore. And this time round, I will invest very seriously. In the past, basically how I invest in Singapore is that I just hold for a few years to get into this range from time to time. Yeah, because there's no growth story that I'm looking at for Singapore stock market. But moving forward, I think my play will be very different. I don't mind to buy and hold for a long time for Singapore market. Yeah. So I believe that in time to come may enter into a growth stage because of the changing of the global order from the west to the east, but that will take quite a few years to take shape. Yeah. Along the way, I will have to make adjustment. I hope that it's not just me, but you will also have to make your own adjustment from time to time. Now, so as I promised, towards the end, let's do a case study. I think we will not be done without a case study, what we should look at. But once again, I have to tell you that it's not a recommendation, it's a case study, right? So what is DFI Retail Group doing? They do retail business, but mainly you could see that their coverage is a lot of North Asia. So North Asia also represents China a lot, right? A big portion is North Asia. So Southeast Asia, maybe Singapore is included in the Southeast Asia pie. So now we know that the China market, they are spending a lot of effort to improve their consumer sentiment. So I hope that they are successful. And I have no position yet, and I do not intend to have any position, but I will keep watch. Now, if their consumer sentiment improve, and I hope that you will break away. Now you could see that it's been on the downtrend, but lately over the last few years, it stopped and it start to form this, it start to move sideways, right? So I hope that there's a break in prices. So when there's a break in prices, which is good, it also means that there's a the patterns have changed. The investment pattern have changed. There are investors more interested in this company, but I also have to understand about the ratio of this company. Are they doing well? Are they still paying dividends? What are the retail business that they have? Go into all these studies. And the price move, I also have to check on the macro picture, whether the consumer sentiment, the China consumer sentiment has improved from the last few years. If they also have improved, it means that they may have entered into this breakout point, and I hope they enter into a growth stage. So there's something that I just want to share with you, a study. It just conclude. So Nixon is that to buy, what to buy. Yes, it's a whole concept of studies. First, you understand the whole macro. Where is the big move coming? I think it's in Asia. But it'll take a while. Then you narrow down the industry, you narrow down to individual stocks. If you have a feel about the particular country that's moving, then you can just invest into the funds or the ETF that's available in CGSI. Yeah, so you can check with your broker over here. So in conclusion is this. To me, investment is always important that uh, we don't just invest and hope that you'll go up, but we also have to take care of the downside risk. So what my study here is that Asia, Singapore, China, we are still at a very low base. And low base means that the potential downside risk is quite safe there. It means that if the world is in turbulence, I do not know what comes next, but at least we are still at the bottom. Did we move up over the years? Not exactly. We didn't move up a lot over the years. So it means that our base are still quite low. It means that the downside risk is pretty manageable. But as we discussed, I think the potential growth on the upside is potential. So that's what I'm seeing here. So I'm excited to share with you tonight because I'm speaking of a different spirit here because the market are confirming my view over the last 3 years. So last 3 years, if you ask me to buy and invest into SGX, I only can say that it's accumulation. Yeah. So accumulation means that I'm not exactly sure whether it'll come, but moving forward because of 2nd April, fundamentally a lot of things have changed, have shifted. So now I'm seeing that it confirmed by technical, speaking with a much greater confidence. So focus that knowing that we are at a low base, risks are quite manageable, and there's a growth potential to come. So before I enter the Q&A, this is some of the, if you want to connect with me, this is on my YouTube channel. My name is Con Hao. This weekend, I think I'll update the market, my insight about the Japanese market. They have high yield right now. So how would that impact the Japanese market? I hope that I can create one where I see a lot of people are very concerned about the Japanese yield. So if you want to understand more about the case study, you can just go to Wikipedia.com. I have a lot of past case study there. Just go to the individual, you'll find them. And then this is my email address, conhao@wikipedia.com. So with that, I just want to pass this time back to Nixon if you have any question. Yeah.
Right. Thanks, Kong Hao. Before we go into the question and answer segment, so just allow me to share my screen here for a while. Okay, so you can see the screen here for feedback. We will really appreciate everyone who is here to help us with the feedback form. The reason why we are able to keep continuing this Learn from the Pro series of education and to have Kong Hao back every year. This is the 4th year running, so we are looking to having him back for the 5th year come August. So your feedback is really important because it also shows our management that the program is being supported, and we can continue to keep this running to bring expert opinions like from Kong Hao to you, and it's all free. So appreciate if you can just help with the feedback forms. You can just take note and take your time to fill in later. The QR code is there, so if you have a mobile, you can scan it. I will also just share. Hold on, let me just kind of paste the URL as well so that you can also access it from Zoom. One. All right, shared the feedback form URL on the chat box. So with that done, I'd like to just bring us back to the Q&A segment then. So if there's any questions, do feel free to key in the Q&A box and we'll come to them. And if you wish to ask question directly, you're more than welcome to just click on the raise hand icon and I can unmute you to speak.
Yeah, maybe before we go into Q&A, so Nixon, earlier the question that you have,
Mhm.
if you buy Singapore, what to buy? I hope they're satisfied with the answer.
Yes, yes.
Yeah.
Definitely, if you don't know what to buy a unit trust or ETF, a managed fund, so that makes it easier to diversify. But of course, if for those who are more technical and more involved, they can actually go into specific stock pick.
Yeah. So
But
the other things that I think we described earlier is that always also know where's the growth story. I think earlier I explained that the growth story, I believe. Now, all this having said, I can be wrong, absolutely wrong. So the growth story I believe in ASEAN, in Asia, in Singapore, in China. I always believe that even personally is that I always build bridges. Yeah, between me and my wife. Of course, husband and wife will always have disagreement, but let's build bridges. So between me and my teenager and young adult children, I build bridges. Between me and my business partner, I try my best to build bridges. Or of course, there's disagreement from time to time, but the benefit is so much tremendous, and I could have the bridges being built could be at some disadvantage initially for me, but at the end of it, I think there's so much benefit. That's my experience. So that's my part about believing is me personally, but I also believe that what I see that ASEAN is doing, Singapore is doing, China is doing, they're building bridges, which I like, building friendship in short. I think in time of turbulence, it will take time to see result. So what to buy. So again, focus on the growth story. Then you can drill down into the individual sector where I dissect for you earlier. What have we invested in? The manufacturing, wholesale, retail, property. I'm not exactly sure. So these are the few sectors. Then you narrow down in the individual stocks. So individual stocks, you check with your broker. That's where CGSI will come into play. That if you like particular sector and individual stocks, you're not exactly sure to look at their numbers, then call up their reminder of stockbrokers. I think they're there to help you to look at their numbers, their ratio, their growth story, individual stocks. Yeah. So I think I just pass this time back to you, Nixon.
okay, great. There's a couple of questions in the Q&A box, and I think we can actually go down from the top. There's one question from Louis Ah Chong. I'm not exactly sure what the question is pointing to, but the question is, can I have the stock code in HKD in Hong Kong dollar? I think you were talking about in earlier slides, some Singapore stock, I think.
HKD.
Yeah, so I'm not sure whether Kong can recall, but uh, Louis, so if you can, maybe you elaborate a bit
Maybe
on
I
the
think move
question.
on to the next question because
Yeah, you go
individual
on to the
stocks.
next question.
Maybe I'll advise you to send me your email me your question. I will just reply you
Right,
individually. I think this
right.
more individual question. Yeah.
Okay, a question from M. How would the US bond crisis, weak US dollar, and looming recession amidst inflation affect what you have just presented?
Oh yeah, so true. And I think something that we cannot ignore is the one of the biggest market. Can you imagine that the UST bonds is before the Nasdaq Dow Jones S&P broke the new high over the last 2 years during the AI tech, right? Before that, do you know that based on market capitalization, the T bonds is the largest market than all the stock combined together? Yeah, even today is very big, right? But if I'm gonna give you this statistic that the T bonds, the highest point was in March 2020. That was 5 years back, right? And today, 2 years ago, the low was at down 44%. That's where Liz Truss lost her prime minister, being a prime minister for the shortest period, because the UK bonds dropped a lot, right? But nobody talk about the US bonds. At that point in time, US bond was also dropped as much as 44% from March 2020. But I'm surprised nobody talks about it. In different platform that invited to speak, I spoke about UST bonds, but I could see that um, the audience are not really paying attention. The US bonds have already dropped a lot. So only the last few weeks they start to talk about the UST bonds drop a lot. In fact, if you check history, the lowest point was about 2 or 3 years back, the UST bonds. So we have to recognize the fact, because there's always lag effect, lagging factor. So sometimes when UST bonds start to drop a lot in such a magnitude, we just have to be very cautious about the US market. So earlier I give you a hint that when we buy, we make sure that don't just focus on the upside, but we also have to focus on the potential downside risk. So I have to say this, that US market, I'm taking a very cautious stance. Technically, it seems like still bull. But because of the bonds are down, yields are high. Yields means the interest rate. US dollar seems a bit shaky. It's been coming down. Inflation still very uncertain, but I can say that the rate of central bank buying the gold, and I could see that they are projecting that inflation is still on the rise. So now, based on all these factors, you tell me, are you going to be cautious about the market? And with tariff, I haven't include tariffs. So tariffs, I felt that is a catalyst for the growth engine of Asia. That's personally my take. Yeah. So sometimes we just need. I've been talking about this over the last 2 years with CGSI. We spoke about Asian market, but you haven't come to a point of a breakthrough. But now we're seeing that. Yeah. So everything, there's a lag. There's time. There's patience. We have to wait. But I would say that the Liberation Day again is a catalyst. It's a switch for the Asia growth engine to start picking up, and you could see that nations are coming together. So to me, it's very exciting. So remember that I mentioned earlier, don't just focus on the risk, but focus on where is the opportunity now. It is in Asia, it's in Singapore, and it may not happen tomorrow, but just be patient. But I think what I shared make a lot of sense. Yeah.
Right,
Maybe
right.
in half a year time, I'll come back to revisit what we have discussed about here tonight. Then it will make totally clarity here.
Correct. So would it be right to say that there is now, okay, so between America and the rest of the world, right? So we can foresee what you're saying, that America is shaky, potentially going into a recession and such. And the rest of the world is basically Asia. We didn't talk about Europe, but Asia as a whole is like they are the low and ready for the uptrend. Um, so are you saying that if something negative happen in the US, it would not have that much of impact on Asia? There's a
Um,
kind of disconnect
Okay, we
or
just have to base on the past videos with CGSI. It's being recorded. And I think there was one time where I first noticed about the Singapore market. Let's zoom back to Singapore market here, is that Singapore market has always been a follower, because I'm still with SGX, their academy trainer here, is that when I was with them as a speaker as well as a trainer, it's a common to hear that Singapore investor will complain to me, Singapore stock market is so boring in the past. Yeah, in the past. So until somewhere around July, August 2022, things start to take shape for Singapore market. Okay, that was in CGSI webinar like this. So we did a case study that in the past was before 2022, is that when US market dropped, Singapore market dropped more than US market. When US market climbed, Singapore market climbed, but not climbed as much as US market. So Singapore investors are very frustrated with Singapore shares. Then in somewhere after June 2022, there was an inflation hit a half 9% for US. I saw a very interesting phenomena. For half a year until end of 2022, there was a high inflation period. Not too long ago, I think most of us still can remember. I saw that the US market has dropped a certain percentage, let's say, for example, 33%. Yeah. But Singapore market from the point to point, the US market have dropped, say, 33%, but Singapore market have only dropped by 14%. That was a very interesting phenomenon that I shared in the session here, is that I could see that in time of crisis for US, because that was crisis when inflation hit 9% for them, I could see that the fund flow are moving here. Yeah, so we did drop, but didn't drop a lot. Why? Because could it be external fund that's supposed to invest in US are coming to Asia? So that was the first time that I saw, because it was a trigger, inflation hit high of 9%. But that was the first time I see that Singapore are taking a lot of pride. Singapore market, that first time I don't see is drop as much. Um, so, yeah, your question, Nixon, I think, yes, I think that there's a flight to quality, in term of, when there's turbulence and uncertainty. And I think I just take, during the last 1 hour in my presentation, I just stated the fact that what was happening, on bonds, on yields, on inflation, all this and that. So these are real. We cannot ignore it. Yeah. So we just have to be very cautious, and really depends on who you are. If you are a trader, I think US market is quite fun because it gives you that kind of volatility. But if you're an investor that you do not know how to react, means that you start to fall and start to turn and you still sit there and do nothing, then you have to be careful. Okay, so if you're a passive investor, you know who you are. I do not know who you are. I'm both a passive investor. I'm also a trader. Yeah, so I keep my two portfolios very separate. Yeah, so my brain is kind of half. So I hope you can do that as well. So if you are passive, means that market turn, you still hold on to your losses. Then maybe I think Asia, Singapore market will be a better ground for you. That's what I feel. Yeah, downside risk is limited and upside potential is tremendous. That's what I'm saying here. Yeah.
Okay, great. Thank you, Kong Hao. Yeah, that's very clear. Okay, I think the next question, moving closer to home. Question for YY. Why shown DFI as it seems to be in a downward trend? So your study case on DFI.
Okay, maybe I just recap a little bit here. I think first of all is that I it's not a recommendation, so it's based on the studies, right? Now, DFI is because of, if you believe in this story, that Singapore invests the most in, one of the most is in wholesale retail trade. Yeah. So, and then let's go back. So I just want to focus on retail trade. And now, so you also kind of uh recap on how I analyze the market. Yeah, how I analyze the market. So these are factual information. So I could see that Singapore company invests a lot in wholesale trade. To recap is that, if you believe in China growth story to come, if you believe, of course, you do not believe, that's fine. Yeah. So first, you must have a conviction that if you believe in that, then let's look at the Singapore listed company. Where have they invested? It could be a lot to wholesale retail. So earlier we studied about the financial market, but let's say wholesale retail is one of them. Then we look at this particular, let me just go back to this one. Yeah, so this is why I come up with this
Kong Hao, you may want to
DFIG.
share your screen.
Oh, share the screen.
Yeah.
Yeah, so thanks for reminding. Okay, let me just go back since you missed out on the screen here. Is that so early we shared about this slides, is that the companies here invested quite a bit on China. So if you believe in China growth story, so this is one of the segment, right? So that's how I derived DIFG. Yeah. So now, then based on the information that I have gathered from SGX, yeah, so this one of report from them. So because they have do the work, so I don't do the work to screen it, right? So this what they say, that 20 most traded SGX stocks, half of their revenue are from China. So I literally go through one by one. Technically first, yeah. Technically, yeah. So technically, so what I saw was, okay, so these are based on study. So again, it's not a recommendation. So technically what I saw was, yes, the is moving down. But what I'm seeing here over the last 3 to 4 years, can you see that the drop have stabilized? Yeah. So when I look at the market, of course, you may not function in this mode. That's fine. Yeah. So I think that's what this sharing session is all about. I always look at patterns because the patterns are telling me a lot of story. Before that, it was dropped, but it kind of stabilized. And I have to acknowledge that technically it is stabilizing. Yeah. So now, if I believe in China growth story, as we could see that more than half their business are in North Asia. So North Asia also represents China, yeah, because some of them they don't want to use the word China. So they use North Asia. And then it also makes sense that what we are seeing here, what they're reading, what their Chinese effort they're trying to do is to improve their consumer sentiments. So if they are successful, I think they're also rolling out something like CDC voucher. But of course, they don't call it CDC voucher. They have a lot of measures. So if they're successful, it means that they are the consumer, Chinese consumers start to spend over there. Then this break may come. Now, remember, just now I said I focus on the breakout point. I look at the range. The moment it range, I kind of look forward to for it to come. But once it starts to break above the range, then I have to also figure out on DFIRG what is their story. Is there something that's moving on, or that the consumer confidence index, the China consumer confidence index is on the rise. Then that will give me this value stage that I'm looking for. So earlier I say that have I bought this shares? The answer is no, but is a shares that I KIV. In time to come, I'm going to continue to see its development. Yeah, I think
Right,
it's a very
right.
good question because it bring back us to the case study. You also bring
Correct.
us back to Nixon question to buy, what to buy.
What to buy? Yes. And also, basically, what I can see is forming a base technically.
Yes.
So, Kong Hao, when do you actually buy? Will you buy only when there's a breakout of this base?
Depend. If I believe in the company itself, I know deeply about the company. Uh, preferred that I'm also a consumer of their product. Yeah, so I know deeply about the company. Then I really like the company. Even there's no break, I would like to accumulate them. Yeah. So waiting for the growth story to come. But in this case, why I did not buy because I do not really very close to this company. I do not know exactly what they're doing. But it caught my attention in a very early stage at this point in time. It seems to me that drop have stabilized and I also believe in the growth story of China. And I hope that, yeah, just take notice of my word here. And I hope that they are successful in in triggering the consumer to spend over there. Yeah. So
Mhm.
if they're successful, then things will be of different picture in the future.
Right. So we still need to keep a lookout. So basically, it's on your watch list.
It's in my watch list right
Yeah.
now.
So just
Yeah.
put in a watch list,
So
and
in my
then
watch list, it means that I will continue to read if there's company report about this company, I'll check out their website. I will Google about them or maybe YouTube about them. Some Kaiso may produce a video about this company. Then I'll try to get to know the company better. See, there's a lot of work involved, but can I tell you that investment is involved in work. So the more work you prow into it, I think the more reward you will throw back subsequently back
right,
to you.
right. Okay, we got a couple of questions. I'm not sure we can answer everything.
Maybe just put a stop and
Yeah,
a clock here is at
correct.
9 p.m.
We
Yeah.
try to target 9 o'clock latest. So I'll just pick one. I think let's pick the question on the S rate. I think that's something on a lot of people's mind as well. So what's your view on blue chip S rate?
Okay, then in that case, let me just share with you. Let me see if I still have the S REITs chart. I hope I have it. Yeah, okay. Okay, let me just talk about the strategy in investing REITs. Okay? Yeah. Can you see my REITs
You
chart
can
here?
see your chart.
You
Yes.
can see, right? Yeah, so again, it's so coincidental, but I think uh before the event starts, Nixon also we discussed about REITs. So now something that you have to know fundamental about REITs is that you should not focusing on the capital gain. Yeah. So the REITs are designed for income because their payout. Okay, this study was done maybe 2 years back. It may not be accurate. So these are all the dividend payout. Yeah, so you have to update yourself. So I've have this study. So their payout is great, 6%, 7%, 5%. I'm not too sure now what kind of payout they're giving. But you have to understand here is that REITs are designed not for capital gain, but if there's capital gain, you are quite lucky. In investment, I don't like to use the word lucky, but in this case, I have to say that if you happen to buy here, it went up here, 150 to $3, that one full return in capital gain, I think you're quite lucky. Now, going back to the fundamental of REITs is that most of us focus on you are the lender. Yeah, you lender, you receive dividend. That's the foundation of REITs. Now, so in that strategy is that usually REITs should not perform in major trend like Dow Jones. You should not see that well from $3 became $6, $8, $9. It should not be that. So REITs in the context of REITs over the long term is always range bound. Okay, range bound. Can you see there's a lot of range in REITs? Yeah, it's range bound. So the strategy for REITs to me is that during the range low, that you're seeing some range low here, maybe you should take a look at certain REITs, the payout, try to understand their model about is it commercial, is it residential? If it's commercial, is commercial is going to do well the next few years? They're going to continue to receive a payout of 7%, 6%. So I would say that based on this chart alone, if you started historically, the rates at this point in time is at the range low. Yeah, most of them, not all of them. So I would say that if you now again, the focus should be dividend play. Yeah. So when you want to buy a REITs, focus on the dividend, but you also have to look at the totality of the chart itself. Where is the range now? If is it around the range low, can consider. Yeah. So at least you do not buy here thinking that you're going to get 5% dividend every year, but at the end of it, you lost on capital loss. So it doesn't make sense to me. Yeah. So REITs, my strategy is know where the range is. If you have a collection of history that's the best, then identify the range and invest around the range low. If you find that it's not juicy enough, look out for other investment opportunity that give you that kind of 5% return. There is plentiful out there, not just in REITs. So this is at least my strategy for REITs. Yeah, thank you.
Right, thanks. I think it's almost 9, so I
Yeah.
think we should have to close the session. Apologize for those who ask question, but we don't have time to answer. But do feel free to contact Hong Hao. I think he has kindly shared his contact details, so you can always email him, check with him your questions. And now allow me to just wrap up the session. I'm going to just share my screen again. All right, so just a quick reminder, we have this session recorded as well. So give us some time, probably my next week, we will upload this recording onto the Learn from the Pros micro page here. The URL is on you can scan for the QR code, but I also share the website URL here on the chat box. So you just need to actually go to our corporate website and search for Learn from the Pros, and you will be able to access this page. So all of Kong Hao's recording are there for the last quite a few sessions. So Kong Hao shared a lot actually about his past outlook. And if you're interested, you can actually go and check out all his past recording as well. It's all been documented. And with that, I'd like to again ask for everyone's help to fill in the feedback form. It's really, really important to us to keep this session going. So your feedback is very, very important to us. Appreciate you can just take a couple of minutes to help us with the form. You can scan the QR code and do it on the mobile phone, or you can just click on the URL, which is in the chat box, the first one that I share with you, and you can then access and do your feedback with us. So with that, I would like to just stop share here and just say goodbye